So hello everyone. This is Wednesday, July 6, 2022, the Hindu Delhi edition, and we'll be analyzing the newspaper with respect to UPSC Civil Services Examination syllabus. First, we'll try to identify the most important news, followed by a detailed discussion of the same. But before that, let me give you answer of yesterday's question. So yesterday's question was to write down the most important ocean current of South Atlantic Ocean. Okay, so we'll make a map for it. So let's make a map for it. This is the equator. Okay, this is South America. This is your Antarctica. This is your somewhat like this Africa. You have Madagascar. Fine. So this is more or less the southern half of the world. Let's make the warm current first. So this would be the warm current. Okay, equatorial south, yes, North South Atlantic equatorial current. This is Cape of Saurog. So we'll see one will get divided here and will meet the north equatorial current, and other will get here. Will go like this. This is called Brazilian current and will go. Okay, and then we have this cold current, very cold, and a definite current, that is circumpolar westward drift. Okay, so it drifts like this and a part of it only comes over like this. So this is the South Atlantic gyre. So let's name them. This is South Atlantic equatorial current. Okay, this point is Cape of Saurog. Okay, this is Brazilian current. This is westward drift. This is Benguela current. Okay, a part of it will obviously go here also, but we'll deal it next time. A part of it will go here, and from here also it will go. Some warm current will come from this side also. Right now I am deliberately keeping them low. Okay, so here we will have a fishing ground, meeting ground type of thing, right? Two currents will be meeting, and here we have a Mozambique current, and it goes like this, and all sorts of that thing. Okay, again here you will have some currents. This will also obviously come like this. This is called Humboldt or Peruvian current. Okay, so we were concerned about this South Atlantic Ocean. Okay, and this is called South Atlantic gyre. Fine, concept is clear. Now we'll go for today. The next question. The question for today is write or identify ocean currents of North Pacific Ocean. Okay, North Pacific Ocean you have to do. Fine. So now let's move on to the identification section of most important news. Let's see. Okay, center to soften punitive steps in environmental case. Fine. And Mr. Modi and Zai will meet amid busy diplomatic calendar. Okay, there is nothing else here. Okay. Okay. There's nothing here. Okay, there's nothing here. Fine. Nothing here. Okay, let's come to the editorial page. Indian aviation needs a strong and steady tailwind. Yes, this would be a good article. Founder of aviation. Okay, we'll see this. It is for the aviation sector, so it is related to what? Physical infrastructure of India. Spectre of wider trade and current account deficit. Okay, fine, we'll do this. Handcuffing. If you want, you can see this. He is a retired IPS officer. Okay, from Chandigarh. He was, I think, DGP of Chandigarh. Sorry, Chhattisgarh. Okay, so he has given some points. If you want, you can see. As per examination, it is very less probable that it would come. Okay. The ways to control tuberculosis very important. TB burden health related. Let's see. The relentless mark of FPI to exit gate. We'll see the gist because we have discussed it many times. If required, we'll see. We'll go inside also. Just the gist BRI. We don't have many things to write here. This is Padmapani. Okay. DT. Okay, there is nothing here. Okay. Actually, they don't understand why this thing has been done. This has been done to reduce the inverted duty structure thing. Okay. I don't understand what kind of opposition is this. They don't understand on what they have to discuss and what they don't have to discuss. It's like they are just opposing the government. Okay. Mm-hmm. Okay, China backs Pak in opposing G20 meeting in Kashmir. It is their propaganda. Okay. Wangi, woman mathematician, wins field medal. Very good. But I think I don't doubt her caliber. She would have been a very good mathematician. But this thing seems more politically motivated. Okay, we'll see this. We'll see this Tarun Bajaj, the finance and the revenue secretary. Okay, then we are now on the sports page. Okay, and obviously we don't have much news here. So with this we have finished identifying the most important news. Now let's go directly and analyze the same. Okay, so we are here. Center to soften punitive steps in environmental cases. Let's see. Ministry points to suggestions to decriminalize provisions. Okay, fine. Which provisions it is decriminalizing? MEA, Union Ministry of Environment, has proposed to soften provisions in EPA by replacing the clause that provides for imprisoning violators with one that only requires them to pay the fine. Okay, from imprisonment to fine. This, however, does not apply to violations that causes grave injury or loss to life. Okay, does not. Obviously, the proposed fines in lieu of imprisonment are 5 to 500 times greater than those of currently levied. The Act currently says that violators will be punishable with imprisonment up to 5 years or fine up to 1 lakh or both. Where violations to continue, an additional fine up to 5,000 daily during such failure or contravention continues after the conviction would be levied. There is also a provision for jail term. The ministry in note this week laying out the rationale governing the amendment said that it has received suggestions to decriminalize the existing provision of EPA to weed out the fear of imprisonment for simple violation. Two major changes proposed are appointing an adjudication officer, okay, who will decide the penalty, such as report not being submitted to and all that. However, in case of serious violation which lead to grievous injury or loss of life, that shall be covered under the provision of IPC, read with section 24 of EP Act. The funds collected and penalties would be accrued in EPF. In case of contravention of the Act, the penalties could extend to anywhere between 5 lakh to 5 crores. The ministry has sought comments from the public on its proposal until July 21. The removal of personal prison term also applies to Air Act, okay, which is cornerstone legislation for dealing with air pollution and Water Act, which deals with violation for all water bodies. Okay, so this is just news that may become law in future, right? So let's see. Obviously, there was no news on these pages, so we'll do the news analysis first, followed by the editorial, text and context page. Okay, so let's see if we have anything here. I don't saw many news. Okay, yes. Rupee fall to 79.33 after June trade deficit widens. Okay, so trade deficit has widened. Shortfall hit a record high of about $26 billion. Indian rupee fell against the US dollar on Tuesday as concerns of wider CAD came to forefront after the country's trade deficit hit all-time high in June. Data late on Monday showed India's June trade deficit widened to a record high of 25.63 billion, following a rise in crude oil and coal imports. So so what happened that since the rupee depreciated, therefore price in a way to be paid in rupees appreciated. Okay. Analysts and economics expect country's CAD to widen to about 3.2% of GDP in fiscal 23 from 1.2%. Okay, so it would be about 2% change. The rupee fell by 38 paisa to its lifetime closing low. Okay. We expect India's widening CAD to remain ongoing drag for INR, which with limited offsets from India's FDI and overseas limited offsets from Indian FDI and overseas investment inflows, exacerbated by ongoing FPI outflow. Okay, we expect USD to INR to reach 82 by 2022 and 81 by Q4 2022. Okay, so there would be a appreciation. One risk to our view is the RBI's USD selling intervention, which could slow the pace of INR depreciation. Okay, if you understood it, very good. If not, I'll be explaining it today in the text and context page section. There is an article there, right? So I'll take this up there only. I won't be taking two things at the same place. Okay, work needed to prune GST exam services, says Tarun Bajaj. GAM waiting rate rationalization. So group of ministers are waiting for rate rationalization. He is the revenue secretary. A lot of work still needs to be done to prune GST exemption item, especially in services sector. Revenue Secretary Tarun Bajaj said. Addressing the CII interactive session, Mr. Bajaj said efforts are on to remove the rough edges of GST over the next 2-3 years. On rationalization of GST rate, Revenue Secretary said a group of ministers are looking into it. We will have to wait for some time. Exemption still remains a large number on the services side, Mr. Bajaj said, adding work needs to be done to prune it on representation that 5% GST on non-ICU hospital above 5,000 is against affordable health care. He said percentage of room in hospital which charges more than 5,000 is minuscule. The Revenue Secretary said that the 28% slab in GST contributes to 16% of gross GST. Okay, so 28% slab only contributes 16% to gross GST revenue, while the major chunk of 65% come from 18% slab. Yes, the standard is 18%, and obviously about 65-70% comes from this taxation only. Okay, so what is saying that we have to wait for, there is still time needed to, okay, to make the rough edges, to soften the rough edges of GST. Fine. So let's see the next news. Okay, then we have identified and analyzed the most important news. Now let's directly go on to the editorial section, text and context page. Should we do the text and context page first? Okay, let's see this explainer. The relentless march of FPI to the exit gate. Why foreign portfolio investors exiting Indian market? How Russia-Ukraine crisis contributed to this? Let's see. Let's do it. Because there is a news article there, also I have to explain that thing. So I'll be taking it up here. Okay, the FPI have been on a selling spree in India. June 22 witnessed the worst sell-off since March 2020. Okay, this comes back of the May sell of figure about 44,000 crores. June was also the ninth on the trot that FPI had sold net of their asset, sold more than they have produced. Okay, trot that FPI has sold more than their asset, that is sold more than what they have purchased. Their selling action has been triggered a significant decline in benchmark indices, resulting in drop in market capitalization of company. So what are FPIs? They are those investors that invest fund in the market outside of their home turf. Their investment typically includes equity, bond, MF. They are generally not active stakeholders and do not exert any control over companies whose share they hold. They are passive in nature, and their investment also allows them to enter or exit the stock at will with ease. Now let's see. Okay. So what is FPI? Fine. We'll be looking at FPI. So look, foreign investment is generally taken to be of two parts, FDI and FPI. So obviously we'll be dealing more with FPI. Let me give, okay. So these are active investors, means they have their control over the company, right? And these are passive investors. So their motive is revenue plus progress. Okay, both things. And here the motive is revenue. Okay, so what happens? So since they are more involved, therefore more involved, and these are less involved in company affairs. Okay, and this makes them what? Tough exit, and this makes them easy exit. Okay, now this is why it is exiting very easily. Now what happens? Let's see. So if you see, there would be in FDI, there would be transfer of technology along with money. There would be high percentage of share sale and purchase. Okay, etc. And here what you will see? Here you will see small amount of share in general of share, equity, bond, MF, etc. purchased. You got it? It goes like this. So what is their primary motive? Their primary motive is to generate revenue from this thing. Okay. What factors spur FPI moves? Promise of attractive returns on back of economic growth draws investors, including FPI, into country market. For example, as per NSDL, FPI brought in about 36,682 crores in 2002. This growth grew to 1.79 lakh, with 1.8 lakh crore in 2010. This correlates with the current expansion of economic output of that period. Despite 2008 global financial crisis, which saw FPI sell off. The year 2017 saw FPI inflows to about 2 lakh crores. Likewise, FPI withdraw 1.18 lakh crores in March 2020 alone, the month when India announced the national lockdown. This triggered the concern around economic growth. In tandem, benchmark stock index Sensex fell. FPI also show keenness to invest in bond, where there is favorable differential between real interest rate and rates on offer of the rates on offer in the country they aim to invest in and in other market, but more specifically compared to the world largest economy, that is US. Now let's see this point. What they are saying. So FPI people FPI. Okay, what do they do? They invest. So on what ground they will invest? They will invest on the ground of high economic growth economy. Second, what will be the ground? High returns, because this is the sole motive to earn money. So high returns, right? Which will be given by high growth economy, because interest rate will be higher here. Fine. So this is two things they given, and one is performance against dollar. Performance of investment country versus US economy. Okay. Why FPIs have been selling Indian holding? So they sold an asset worth of 50,000 crore in June 22. This is the second highest. Post-pandemic recovery in Indian economy has been uneven. The second wave devastated life and livestock. The economy shuttered again with a third, a bit less severe, saw the spread of Omicron. Added to the return of pent-up demand in economies worldwide as pandemic subsided, the pace of recovery caught suppliers off guard, contributing to supply-side shortages. As the industry was grappling with this challenge, came Russian invasion of Ukraine. Okay. Sunflower and wheat supplies, to name just two commodities from two nations, were impacted, leading to rise in global prices of this crop. As supplies in general tightened across the globe, commodity prices too rose and overall inflation accelerated. India witnessed a quickening pace in price rise that stayed above Reserve Bank. upper confront level of 6% for 5 months, running touching 7.8% in April before receding to slightly less aggressive 7.04 in subsequent month. Industrial production has seen a bumpy ride without giving confidence of full and final recovery. For example, S&P Global India Manufacturing Purchasing Manager Index slid 53.9, the lowest level in 9 months, from 54.6 in previous month. The expert attributes to this inflation pressure, which also dampened business confidence sentiment to 27-month low. Consumption expenditure too remained weak in subcontinent. With each of these factors contributing to decline in confidence of robust economic performance, FPI have been exiting market investment over the past month. Okay, so let's see again. See, so what were the factors? So this was the economic growth angle. So we'll be seeing this, or the performance. Both are obviously the same thing, someone more or less. Okay, let's see what are the points that. So affected. Number one was post pandemic recovery. Not even. Okay. Second was industrial output problem challenges of dwarfism. Third was Russia-Ukraine crisis, rising inflation, especially. Okay. Fourth was, we have seen everything more or less. Consumer expenditure remains low. Okay, this was the consumer expenditure remained low. So four things are there. Fine. Post pandemic recovery, not even. Industrial output challenges of dwarfism. There is Russia-Ukraine crisis, increased the inflation, and consumer expenditure remained low. Fine. So four things were there that led to what? Say bad economic performance, and this led to what? This led to outflow of FPI. Okay, so this is the thing here. Let's see what else is there. Adding to mix, the US Federal Reserve raising the benchmark rate. Okay, so the key rate range now goes to 0.75 to 1%. So this was one of the factor, and the other factor was plus international factor. These were the domestic factor. International factor, I'll say, let's keep this also here. International factor. From US front, increase in benchmark rate by US Fed and Russia. These are two superpowers. And what is the Russian thing? Russia-Ukraine crisis. This led to inflation. Okay, so these two things also led to decline in relative performance of Indian economy. Now how would you say that? Now look, if there is inflation, means more money needed, more money outflow for goods services purchased. Okay, so the economic performance will decline, because if you invest more money, look, if you have this much money available, okay, and initially you used to spend this much money on purchasing goods plus services, and this out of this money, this was for capital formation, okay, and this was other investments, right? If it goes like this initially, now what happened is that now due to rise of inflation, what happened, this extended, this came to here due to inflation concern. Okay, so new goods and services cost. Okay, why? Increase inflation. Fine. So due to increase inflation, what happened? That this price increase. So what will decrease? Your capital formation may decrease or your investment may decrease. Investment itself lead to again capital formation. Okay, so if we consider both, let's see that both was investment only. So what will happen? This in overall investment will decline, and when investment decline, then there is decline in GDP as well compared to potential or expected GDP. I'll give you an example. Eco survey 2021-22 said 2022 growth percent will be 8 to 8.5%, right? Budget says it would be 9.2 or 9.3%. You see, now why could budget say that there will be an increase? Because they will be spending more for investment. You see, we have this scheme PM Gati Shakti. Okay, capex expenditure would be increased. Capex expenditure, you see, capex will lead to what? Capital formation or say investment in the economy. So this is why they are expecting the growth to increase. So it goes like this. Now what had happened, since there is inflation, so the net expenditure increased, that led to next decline in investment. Okay, expenditure increased, led to decline in investment, led to decline in GDP that was expected. Okay, so this is one concept here. Now let's see this benchmark rate. I have explained this n number of times. Now US benchmark rate, will see this. So what happens, that this is Indian economy and this is US economy. Okay, so initially this is an FPI investor. Okay, investor, fine. So what happened, inflation was initially I naught 5%, and say the interest rate IR naught was 7%, right? And FPI has invested here $50 billion, or I should write it like this, $50 billion, right? Investment here. Now the inflation, the new rate is I naught, the inflation is now 6%, say, and IR naught is 7.2%. So what is the net rate here? Net IR equals to 7 minus 5, that is 2%. What is the net here? 1.2%. Am I right? Yes, I am. Fine. So it is 1.2%, right? So this is what net this FPI investor will get. Now let's see the same for US. So initially in US the interest rate was 2% or 0.25%. Fine. Inflation was 2% and interest rate was, or say inflation was 0.5% and interest rate initially was 0.25%, right? And final what happened, I1, it should be I1, IR1. Okay, I1 was, it became interest rate, inflation became 0.6% and IR not became 0.75%. So net here, net interest rate available is minus of 0.25% to net interest rate available is plus 1.5%. You see, so now what will this FPI investor think? He'll say that although he's getting 1.2% of net return, means he'll be getting about 60 billion dollar after a year, say something like that. So and okay, so he'll be getting about 60 billion dollar in India, but he won't be getting that in US. But why he will be keen to invest in US? There is one very important factor. US economy is most powerful. Okay, You know, if you have to buy the share of Tata Steel versus some other steel, or say you have to buy share of Ultratech cement versus some other cement like Bangar cement. I'm just telling for example, no offenses to anyone, right? Obviously, Ultratech has more market power than Bangar cement right now or any other cement. So obviously their share prices may give you less return, but they are more stable as compared to the other. They may give you a rise and a fall simultaneously. Okay, so what will happen? This FPI person would take up this $50 billion, say will take up $25 billion and invest in US. That's simple. So this is what exit for of FPI for India, or we say or entry of FPI in USA. So it goes like this. So two factors are there. I just explained you because it's a very important article, right? Now let's see. What is the difference between interest rates in US and other market narrow? Okay. When the differential between is narrow, if such an occurrence is accompanied by strengthening of dollar, then ability of investor to realize healthy returns is impacted. For returns measure not only in value of appreciated asset but also the exchange rate changes. If dollar strengthens against rupee, so other thing is one more factor is trade factor. Trade factor is what? Strengthening of dollar versus rupees. Okay, that is appreciation of dollar. Fine. So what happens that since dollar appreciates or rupees depreciates, so for the same amount of rupee, this is this article only. Let me give you a. I'm explaining that point only. Okay, now I'll show you that article. Rupee fall under just trade deficit widens, and it is given somewhere here that since the trade deficit widens, therefore rupee is falling. I'm explaining that part only, right? Okay, so what happens is, say dollar, so initially you paid 70 rupees per dollar. Now it has finally you are paying 80 rupees per dollar. So what had happened? Say internationally you are getting oil at $20 per barrel. Example I'm just giving. So initially what you have been paying 1400 rupees per barrel. Now what will you pay? 1600 rupees per barrel. You see, there was nothing wrong in international price. International price was more or less stable. Still then, what happened? Your cost increased in rupee. Why? Because you have depreciated versus dollar. And why this has happened? This is a kind of dialectic relation, right? So you have your depreciation. There is FPI outflow. So depreciation led to FPI outflow and FPI outflow led to depreciation. This is like this. Why? Because more the depreciation impacts poor performance of economic performance. Okay, why? Because I'll tell why. But wait. Okay, and FPI outflow leads to again dollar to rupee. It will decline, or say rupees to dollar increase, and this rupees to dollar is nothing but again it is showing depreciation. So depreciation, poor economic performance. Okay, this leads to reduced FDI confidence. This leads to increased FDI outflow. Okay, so it is happening like this. You understand now? So FDI outflow increased, and this again leads to, you see, FDI outflow increased, and this again leads to depreciation. So this cycle goes on. This is a vicious cycle. This may lead to stagflation, etc. Okay, fine. So this point you have understood. Now let's see now one thing is remaining, how trade deficit thing, right? Now what happens is depreciation leads to increased trade deficit. How? That point I have explained already in a small little time. Let me give you one more time that concept. This is oil price, right? It is priced at $70 per barrel. Okay, so initially and finally, okay, initially what you had 70 rupees per dollar, and final or let me write it here, 70 rupees per dollar, and here finally you are 80 rupees per dollar. So what will happen? 7 sevens are 49, 4900 rupees per barrel, and here will be 5600 rupees per barrel. You see, for same this thing, oil purchase, initially you have to pay $4900 per barrel, and now you have to 4900 rupees per barrel, and now you are paying 5600 rupees per barrel. You see the difference. This will cause what? Initially, say the current account deficit was minus 4900 rupees. I am just considering that we are purchasing oil and nothing else. We are not exporting anything, we are not importing anything apart from oil. Okay, so 0 minus 49, exports minus imports, so it would be 4900 rupees. Now it became what? Minus 5600 rupees. You see, current account deficit is widening. So deficit has increased. Deficit it was. Current account deficit should have been written like, and this is import minus export, because I am talking about deficit. Okay, so sorry, minus 0. Okay, or minus 0. So it is 4900. This is 5600. So you see, the current account deficit has increased from 4900 to 5600. This is what happens. So depreciation leads to trade deficit. Now trade deficit will lead to what? This trade deficit will lead to drag on economy, economic performance. Why drag? Because you have to pay more for something that you are initially paying less. So if you have this much amount of, this is what you are paying. Okay, this is your total economy. Okay, and this was what you were paying for purchasing some goods. Okay, now the cost has increased. So this was your investment in the economy, and investment unfolds to increasing of GDP. Now if you increase this to here, if this increases to here, okay, the new value, so what will happen? This will decrease. So this is the new one. Okay, so this has decreased. Okay, obviously decreased investment. This unfolds to decrease in GDP or economic performance. So there will be a drag on economic performance, and this drag will again lead to what? Depreciation. Why? Due to our factor that I have explained. So this is one more vicious cycle. Drag on Indian economy will lead to what? UPI outflow, FPI outflows. It will lead to what? Which will again lead to depreciation. So all the factors are intermingling, where if one is affected, the other leads to it leads to depreciation effect, right? Now let's see. Investor is able to realize few dollars for given quantum of rupees, asset liquidated. Further, if inflation quickens to the overseas market where investor has placed fund, then real returns even further impacted. If there one more thing is left, I'll explain it here only. Appreciation of dollar against other currency and increased performance of Indian forex. Okay, what happens? Forex has 5 hard currency: dollar, gold, SDRs, etc. Right. So these 5 currencies, it is pound, euro, yen, and one more is there. I don't remember. Okay, fine. Yes, dollar. I've got it. So if dollar is appreciating against these currencies also, then what will happen? These are depreciating. So let's see it. Initially $1 was, say, equivalent to 20 pounds. I'm just giving an example, right? And now it goes on to become 40 pounds. Okay, so what will happen? So Indian forex had say $100, 200 pounds, okay, 150 yen, 90 zen, and anything else left? Yes, and say 500 euros. This was how the forex reserve of India was. So how it will affect? Okay, 20, 30, say this is 30, this is 40, and this is 50. I'm just taking an example. It became 60, it became 80, it became 100. So what will be the new thing? Dollar 100 and India and what we say? It has rupee dollar has also been from 70 to 80 rupees. Okay. So let's see. So initially we had $100 that accounted for 7,000 rupees. So it will be what now? 8,000 rupees. We had 2,200 pound for 20, or let me make space here, initial and final, so that you can see. So initial valuation and final valuation. Okay, so what was the initial valuation? Just multiply this 107,000 rupees, all in rupees. Okay, this also in rupees. Fine, 7,000, then we have 20 into 200 for 4,000 rupees. Then we have 30 into 150, 4,500. Then we have 49 for 36, and we have 5 5s are 25. Okay, so this was the valuation net. Now what will be the final valuation? So 2 times and it has become 80, so 8,000, 2 times. Okay, so you see India has gained, fine, rupees. Why it has gained rupees? Because dollar has performed against these currencies as well apart from rupees. If say you understand now, this is the concept. Fine, so let's see if anything else is remaining. I've given you more or less all the concept. They tend to exit assets seen in risky, such as I've already said, the confidence thing. Emerging market like India, Brazil, South Africa. Indeed, rupee has been depreciating against dollar, which has in general strengthening against several other currencies. The rupee. Okay, what impact does an FPI sell off have? When FPI sell their holding and repetitive fund back their home market, the local currency take a beating. Obviously, I've said that depreciation, FPI outflow, depreciation. They sell rupee in exchange for their home market. As supply rupee in the market rises, its value declines. Obviously, this is a very important point. Okay, so they will sell rupee in their home market, so the rupee market increases and this leads to decline in rupee. Recently it was trading the region of trading in the region of 73 to US dollar. Now it is showing flirting to with 78 level. With weaker rupee we have to shell out more funds to import the same unit of good. I've already told you that if 70 per dollar per barrel example it become 80, then what happens? Okay, I've already explained. The most telling impact is cost of our crude oil imports contribute to 85% of our oil needs. Fine, so you understand this. This was a very good article. I therefore read it and explained it to you. It took me about more than half an hour to explain this thing. Okay, so BRI, let's see. In 13, China during his visit to Kazakhstan and Indonesia expressed vision to build Silk Road economic belt and 21st century maritime Silk Road to break bottleneck of Asian connectivity. The biggest project under China under BRI CPEC. Over the time, China placed 62 billion in low interest loan from Chinese state-owned bank and ADB. Bangladesh, which joined, has promised second highest belt road investment by China in South Asia after Pakistan. Multiple studies show that Bangladesh has been able to benefit from BRI while maintaining diplomatic strategic ties with both India and China. It has managed not to upset India by getting India to build infrastructure projects similar to BRI in the country. Fine. There was nothing here on this page now. Okay, so we are left with 2 editorials. Let's move to the editorial page. Okay, I made the read wrong today. I could have not read it and I could have just read the gist, but it was important, therefore I read it out. Okay, so we have 3 articles still remaining. Indian aviation needs a strong and steady tailwind. Okay, policy makers out to recognize countries' untapped potential and work towards dismantling many hurdles. I'll be doing it very briefly. It is just, I think, the problems of this sector, right? Okay, there are things they have given. The reforms opened up aviation sector and all those things. Sahara survived, resulting in cartelization. Okay, let's see the barriers. Sadly, while other sectors have grown by leaps and bounds, Indian aviation has become the sick man of India. The growth aviation has been affected by choking regulations, obviously, tough entry barriers and for new entrant, high fuel prices on account of sky high taxes, and inefficient public sector airport that are paving way for monopoly of airport that extortionist in absence of robust competition. Frequent and knee-jerk changes only points to the absence of long-run visionary strategic policy, not just for airline but also for entire gamut of sector in aviation. The number of Indian who buy air tickets, okay, let's leave that part. Okay, so what do they want to say? There are just data. Okay, fine. Eureka movement. I founded a helicopter company in 1995, but in 2001 I envisaged a new vibrant India that unleashed consumer aspiration and citizen in wake of flood reforms in the economy of China. The explosion of television channel has spurred consumer demand through advertisement and cycle and all those things. Animal spirits are there. Let me give an example. Okay, I don't want this example. It was crazy idea, but environment seemed conducive under NDA government led by Mr. Vajpayee. Startup India is laudable initiative by Government of India. Okay, it is okay, fine. Aviation is equitable to economic growth for country to be globally competitive and all those things. Passenger airlines and air cargo, fine, giving more people, more importantly, boost tourism. Okay, these things we have in our statics, right? Uran was one of the most important trademark scheme carry out these reforms. Ergo, okay, okay, fine. Air cargo integrated with road. Okay, we are doing this. It is crucial to understand that passenger airline growth. There will be reforms in all area. Give it a read. I don't think there is many important thing. I've underlined most important part. This is the most important part. The challenges of the sector. Obviously, we all know these things, right? A matter of import, specter of wider trade and current account deficit dragging the rupee down. I have dealt this just now. You give it a read, you will understand it. Okay, no need to repeat the same thing every now and then. The way to control tuberculosis: 3 major deficiencies in revised national TB programs need correction. Okay, let's see. Tuberculosis is the worst among endemic disease, killing 1.5 million people every year. TB has affected adult in most productive years and therefore improvised the family and the nation. In India, TB capitals of the world. In India, the TB capital of the world, the disease kills somewhere about 14%, 1400% every day. These are gross estimates for our health management system. No method to count exact number. In 50s and 60s, India was global leader in research in epidemiology, transmission and domiciliarity treatment of TB. The NTBCP of 1962 was district-based one with public-private participation. However, upscaling the model proved unsuccessful and program failed to control TB. With that, we lost self-confidence and began doing what we were told by WHO in the RNTCP. WHO experts, without factorizing the difference between TB epidemiology of poor and rich country, used theoretical construct of TB control to design RNTCP. By 2018, India realized that the light at end of the tunnel was still elusive. Flaws in the program. Okay, flaws. First, The program that is heavily funded by government, there is no prescribed method for monitoring trajectory of TB control. Okay, this is very important. Contrast with the national NADS program. Before National Aid Control Organization was established, Indian ICIMR managed AIDS control task force had unique method of monitoring control trajectory, popularly called sentinel surveillance. Through it, we had data on infection perseverance that can be compared across years starting from 1986 to date. That there was pressure from WHO expert to abandon it, but credit must be given to Dr. Tripathi, the then Director General of ICMR, for politely but firmly refusing to oblige. Recently, India confronted WHO estimates on COVID-19 death in India. That government could publicly stand up to WHO was a good sign. We must now boldly point out the flaws in WHO design, RNTCP, and design our own comprehensive strategy. Second, assumption that treating pulmonary TB patients alone would control TB was epidemiologically fallacious in India. Okay, the theoretical principle is source reduction. If one patient is proximate source of infection and disease to another in the community, early diagnosis and treatment would work as a source reduction. In India, India is a high burden country. Large population of adults carry TB infection in lung in a dormant condition for life, which is called latent TB. Some among them deteriorate and develop over TB disease, reactivation TB, HIV infection, diabetes, under nutrition, lung damage due to pollution, tobacco, killing, fall in immune function due to disease, alcoholism, etc. Reactive TB. Third, RNTCP had failed to elicit people's partnership in TB control. In India, AIDS control program, public education was given priority. Okay, so red ribbon clubs in school and colleges are its legacy. Yes, I also had this session in my school while I was in standard 8th. Without people informed participation, stigma and deadly delay in seeking help will continue. Realizing that TB was not under control, WHO called for another program revision through a World Health Assembly resolution in 2014 to eliminate TB by 35. Emboldened by the promise of an effective strategy, Prime Minister announced in 2018 to eliminate by 2025. Controlling TB, human mastery over microbes includes control, elimination, and eradication. Control refers to the reduction of disease burden through specific intervention in a predetermined level in pre-stated time. Evidence will have to show that reduction was due to intervention, not due to secular trend. Diseases that have social determinants tend to decline over time with better housing, nutrition, education, and income. This is what secular trend is. Globally, by secular trend, the burden of TB has been falling by 1 to 1.5% per year. Elimination refers to achieving zero frequency new cases. As we have huge backlog of latent TB, we cannot eliminate TB, but we must aim for high level of control and document it with measurement. This will do justice to Prime Minister vision. High control is achievable as we have major asset by way of RNTCP. Trained, straight and district TB officers are already on the job, and we have extensive network of TB clinics and all those things. Once deficiencies listed are corrected, we can control TB. Okay, so it's a easy article, just give it a read, you will understand. I've read it for you, that's easy. Okay, so I think we have come to end of today's newspaper. Yes, so I hope you like it. If you like it, consider subscribing the channel, liking our content, sharing it with your colleagues, your mates, your partners, your friends, your family, and comment. You have to comment two things. One, the answer to the question asked. Okay, if you have not seen the question, then go to the first 2-3 minutes. In 4 minutes, I have given all the question to answer to yesterday's question and question for the today. Okay, and you have to comment your views. Okay, fine. So with this, I am ending today's newspaper analysis. I hope you like it. It's time to say goodbye. So goodbye all. Take care. Bye bye and Jai Hind.